All right, today we're putting a stock on the examination table. We're talking about Datavault AI, ticker DVLT. It's been sharing some really alarming symptoms lately, and we've got our hands on its technical report. Think of it as a full-body scan to figure out what is really going on under the hood. So let's scrub in and get to the diagnosis.
So what's the chief complaint? Well, how about a staggering 17.76% drop in a single day? Wow. I mean, this is the kind of hemorrhaging that gets a patient rushed straight into the ER. It's the big, flashing red light that brought this stock into our diagnostic lab today. Now, we got to find the cause.
And here is the top-line number from its overall health report. On a scale of 1 to 100, DVLT gets a technical score of just 26.59. Let's be blunt here. That's a failing grade. A score this low suggests some serious underlying weakness and, frankly, a deeply bearish prognosis.
So that's exactly how we're going to approach this, like a doctor's diagnosis. We're going to examine all the vital signs from this technical report. We're talking trend, momentum, trading activity, to get a really clear picture of this stock's health. And based on that initial score, we should probably prepare ourselves for some bad news.
And yep, the report's final conclusion is a comprehensive, bearish outlook. And this isn't just a short-term flu, something it'll shake off in a week. The report sees this weakness stretching across both the short and the long term. And that's a critical point. This sickness seems to be pervasive.
So the big question is, how did the report arrive at this pretty grim diagnosis? Well, our first test is to check the patient's direction of travel. Is this just a stumble, or are we watching a sustained fall? Let's start by digging into the core trend indicators.
Okay, before we dive into the numbers, here's a quick primer on a key diagnostic tool we'll be using, the Simple Moving Average, or SMA. It's just the average price of a stock over a set period, like 20 or 50 days. You can think of it as the stock's center of gravity. It smooths out all that daily noise so we can see the true direction of the trend.
And what the SMAs are showing us is, well, it's a picture of consistent weakness. The current price, about 25, is trading below every single key moving average, the 20-day, the 50-day, and the long-term 200-day. Now, when this happens, those averages, which used to act as a floor of support, have now flipped. They've become a ceiling of resistance, basically pushing the price back down every time it even tries to rally.
And make no mistake, this isn't some weak, meandering trend. The average directional index, or ADX, which measures how strong a trend is sitting at 37. Now for context, anything over 25 is considered strong. So this confirms that the downward move we're seeing is powerful, and it is well established. This isn't just a bad day, it's looking more like a chronic condition.
So we've established a strong downward trend. But does it have any energy? Is it accelerating, or is it running out of steam? Think of it like a car rolling down a hill. Is it picking up speed on the way down? Let's check the momentum indicators to find out.
The MACD, one of the most popular momentum indicators out there, is flashing a clear-as-day sell signal. The faster MACD line has crossed below the slower signal line, and they're both in negative territory. What this tells us is that the downward trend isn't just continuing, it's actually gaining speed.
And the Arun indicator gives us this stunning visual confirmation. It measures the strength of a trend, and just look at this breakdown. Arun down is at nearly 86%, while Arun up is barely even a blip on the radar. I mean, this overwhelming dominance just confirms that the bearish momentum is extremely strong and totally one-sided.
Now, how intense is all this selling pressure? The RSI, or Relative Strength Index, gives us a clue. It's sitting at 36.49, and it's rapidly approaching that oversold level of 30. This means the stock has been sold off so hard and so fast that even if you get a little bounce, the underlying pressure is just intensely negative.
And if the RSI suggested the patient was approaching critical condition, well, the stochastic oscillator confirms it. With a reading of 17.96, way below the 20 threshold, this indicator is screaming that DVLT isn't just approaching oversold, it's already in a deep coma. The selling has been absolutely relentless.
Okay, so the trend is down and the momentum is negative. But does the market's actual trading activity, the buying and selling, confirm this diagnosis? A good doctor always looks for corroborating evidence. Let's see if the trading volume is telling us the same story.
And it absolutely does. On this massive down day, trading volume surged 26% higher than its recent average. This is such a critical piece of the puzzle. See, high volume on a big drop shows powerful conviction. This wasn't a quiet drift lower.
It was an aggressive, full frontal assault by the sellers.
The on-balance volume indicator confirms this, too. It's basically a running total of volume, and the fact that it's declining tells us something crucial. The volume on down days is overpowering the volume on up days. In technical jargon, this is called distribution, which is really just a fancy way of saying that smart money is getting out, and shares are moving from determined buyers to very motivated sellers.
And this quote here from the report's Bollinger Band analysis just captures the situation perfectly. The price is being pinned down right against the very bottom of its expected trading range. Trading this close to the lower band is a classic sign of strong, sustained bearish pressure. It's getting squashed.
So far, we've mostly looked at short-term indicators. But is this just a bad 24-hour bug, or is it a chronic condition? To answer that, we really need to zoom out and look at the bigger picture to see if this is a recent problem or if it's part of a larger, much more troubling pattern.
Wow, this slide really paints a devastating picture. The stock's 52-week high was $4.50. Its low was $1.01. At $1.25, the current price is just scraping the bottom of its entire annual range. This visual makes it painfully clear just how far this stock has fallen and how much value has been wiped out over the past year.
And to put our really fine point on it, the stock is currently trading at just 6.88% of its 52-week range. What does that mean? It means it has surrendered over 93% of the ground it gained between its annual low and high. That isn't a dip. That's a catastrophic collapse, and it just screams a profound long-term weakness.
Okay, we've run all the tests. We have examined our patient from every single angle. Now it's time to gather up our diagnostic notes and deliver the final summary of DVLT's technical health. So here's what you really need to know. The really crucial takeaway here is the sheer unanimity of the data. Every single test we ran came back negative. The trend is strongly down. The price is trapped below major resistance levels. Momentum is negative and deeply oversold. High volume confirms sellers are in complete control, and the long-term prognosis is just as bleak, with the stock near its yearly low. The diagnosis is clear and it is unequivocal.
And that brings us to our final, pretty unsettling thought. The technical report on DVLT is a perfect storm of bearish alignment. Every single signal is pointing in the same direction, which leaves us with a critical question for anyone watching this stock. When all the technical evidence is this one-sided, what kind of fundamental change or market shock would it even take to begin to turn this massive tide?